Hey, Heather. Hey, it's Rick. Going to talk to you a little bit about some of the objections investors give us and maybe able to enlighten them a little bit on a different way of thinking. So I think one of the things to consider is a lot of times people haven't heard of land banking, so they think it's something that's brand new or it's really crazy risky. And emphasizing the company's been doing this since 1979, and there's tens of thousands of investors who've actually done land banking. Just because they haven't heard of it doesn't mean it's brand new. And then to keep it simple, land banking is a simple diversification. You don't have to put all your money in the land, but you should put some. And then also understanding, if we look at the words on the screen, it's hassle-free investment that does not cause stress, does not call you on the phone. We're not picking up our phone 20 times a day looking at the green and red of the stock market going up and down. It's simply a great real estate diversification that over time can create geometric equity gain. That's what we're going after. Most investments that give cash flow do not also give geometric equity gain. Cash flow is great, you can live on it, but to create wealth, you have to create geometric equity gain. There's a lot of ways to do it. One of them is land banking. So when people start getting nervous, a lot of times it could be because the dollar amount they're thinking of is too high. So having them understand it's $25,000 to $2 million is pretty much affordable for almost anyone. So that's a little bit on the first slide. Second slide is, and I know you know this, but tremendous amounts of wealth have been created with real estate over history, and that's real estate holdings. That's counting homes, buildings, and land. This is what the holdings of very wealthy people look like. I did not invent this. I got this off the internet. So real estate should be a big piece. Time horizon. So 7 to 10 years. And you can look at all the wording here, but basically it's patient money. It takes time. If we look at the liquidity trade-off, land isn't like stocks or bonds. You can't sell it instantly at market price. This illiquidity is actually the positive. It protects people, number one, from making bad decisions, freaking out over market volatility. And if you look at that last sentence, the wealthy understand this. Real estate has always been less liquid than paper assets. Yes, is how most millionaires build their wealth. It takes time. Investments that are illiquid are the ones that produce the largest returns done properly. So this is what we always ask if you look at the right-hand side. The big question, forget all this other, how much money can you put away for 7 to 10 years? And if the answer is 0, then don't invest. If the answer is, I have $40,000 I'm not going to need no matter what, then that's the number you should use to invest. Land illiquidity. Investors often say land is too illiquid. Well, honestly, which real estate investment is truly liquid? You can't sell your home tomorrow. Yes, you could pull money out of it, but if you use an investment as an ATM machine, you are a speculator. You are not an investor. Speculators don't do very well in any form of investing, let alone our form of investing. There's some other big things that people don't consider. That's number one, the wealth that can be created with self-directed IRAs, the patient money that's just sitting there. Heather, if someone doesn't have an investment account or doesn't have an old 401k, all they have is cash and they don't have cash reserve for long enough, this investment is not for them. The other big wealth creator, which puts real estate over the top of any other investment, is the power of the 1031 exchange. I am not going to be a 1031 exchange educator here, but if you sell a property and there's $500,000 profit, if you put that money in the bank, you pay taxes on it. Just like if you cash out the gains of your stocks, you're going to pay taxes on it. If you have $500,000 in gains on real estate and you take that money and you do a 1031 exchange and you buy another property with that $500,000, you've delayed taxes and you keep doing it and you keep doing it. And when you ultimately sell, you're in a different tax bracket. So the power of the 1031 exchange and the ability to control real estate inside of a self-directed IRA makes it a very, very powerful wealth creator. And then on the right-hand side, land is determined by future highest and best use. The development's coming in within a 3-mile ring. And Marcella shows that on each parcel when somebody asks for a parcel and she does the property profile. The investment range is $25,000 to $2 million, depending on size and location. It's affordable. People who freak out about the illiquidity or they think the only thing they need is cash flow, you got to think about your future. Land will be there And I'm going to show you another slide that shows you how and when land is going to be there. The main thing that eases the pain and calms people down is what can you park for 7 to 10 years. That's what's helped us with our 13 parcels. I think you might even own more land than we do. We have people that have purchased 25, 28 parcels. Use patient money for geometric equity gain so you can have wealth in the future. I don't care if you're 25 years old or 70 years old, unless you plan on dying in the next 2 years, you're going to need money for the future. And not outliving your wealth, there's a term called superannuation. And superannuation is we're all living longer. And if you outlive your money, at 90, you're going to be working at Walmart, or you're going to be homeless, or you're going to be living with your kids. And I don't want to put that burden on my kids. We don't want to fall prey to functional obsolescence, so we need to have wealth that will carry us into the future. One of the reasons why land banking beats traditional real estate and stocks in an era of market volatility and crowded investment opportunities, land banking emerges as a compelling alternative strategy. Now, the big thing here is when lots of people buy a stock, it also falls, your investment falls prey to the news, falls prey to comps. There's a lot of people buying and selling, which is constantly changing the value. See, with land, when you own one parcel of land, the only thing that is in control of the returns is us and the developer. The more desperate they are, the higher the value goes. And then we coach our clients how to get the highest and best. So we're not dealing with something that goes like this. We're dealing with something that grows steadily over time until offers start coming in for developers, and that's called a parabolic curve. That's the geometric equity gain. I'm not going to read every word on these, but land has low competition. Like I said, one person owns it. It's a tangible asset. Land is a real asset. People say, I own gold. Where is it? I own shares in it. So you don't own gold. You own shares in gold. With land, you own an actual asset. You could go there and scoop up the dirt. Very, very simple ownership. Land, you could look this up, but land falls under Proposition 13. The holding costs are very low. Marcel and I own multi-millions of dollars worth of land, and the property taxes are in the few $1,000s per year, where if you own a house, it's tens of thousands per year. The holding cost on land is extremely low, and we don't have an insurance on it. And then you can have tremendous appreciation if you're doing land banking and you buy it in the path of growth. So again, low entry point, tax advantages, limited supply. Even if you buy gold, a lot of people don't know that the Morgans and the Rockefellers have trillions of dollars, well, maybe not trillions, multi-billions of dollars. But there is trillions of dollars worth of gold, but not owned by those two families, in safes. And they control how much gold is worth by how much they release on the market. When I sold jewelry, they used to tell us in the diamond trade, if all the diamond manufacturers released all the diamonds into the market at one time, a $1,000 diamond would be a $10 diamond. So you're falling prey to a lot of outside sources when you invest in certain commodities and stocks. Land is very limited. They're not making any more of it. It's long-term wealth. Depending on the zoning, you could have a lot of different things they could put on the land. And we're not dealing with tenants, toilets, termites, troubles, and taxes. Another big one is the thing I love is it's long-term. I know when I cannot be as successful as I am now, when I'm older, when I'm weak, I still have an investment that will still be there. Now, I lost millions in a downturn 15 years ago, and I lost my house. Well, I got divorced in '08, but my house went down under market and I couldn't sell it. My land doesn't disappear, doesn't go down, doesn't go away, just slowly grows over time because it's land bank land taking advantage of something called ODM, which is other developers' money. As development comes in, the value of our land goes up without spending any money. Perfect versus imperfect market. Houses and the stock market are governed by comps. It's very, very difficult to get wealthy with something that has comps. If you own $1 million home and your next door neighbor sells their home for $800,000, you just lost $200,000. If Zillow says your house is worth $1 million, I can't get it for $200,000 because there's comps. Land has no comps. So Marcella's company has the ability to go in and buy land for pennies on the dollar because people don't know what it's worth. And then if you look at the bottom right-hand side where it says the imperfect market, you can sell way above market and achieve arbitrage when you get a desperate buyer. So Wall Street works between 8 and 5. It's highly regulated. You cannot name your own price, and it's virtually impossible to get arbitrage. With land banking, the land is growing 24/7. Every development that comes in, every road that's put in, every stoplight that's put in around my land causes the value to go up without me spending money. And you can get way above market rate. And I hope that helps you, Heather. Hey, if somebody doesn't want to buy land because they only want cash flow, land is not for them. If people want to create wealth and become millionaires and not have the stress of stuff going up and down, nice and patient, wealth is for them. Speculators are exactly what they are. 90% of them, 99% of them are broke. Investors, true investors that aren't looking for something that's going up and down constantly, become wealthy. We can help people become wealthy, but it's not a scratch-off ticket and it's not a get-rich-quick scheme. Hope this helps. See you soon. Take care. Bye-bye.